All right, today we're talking about the bullish case for private equity. We're going to step away from all that day-to-day noise of the stock market and jump into an investing world that's built on a completely different philosophy. So let's get right into it.
So, does this sound familiar? You're watching the markets, and they're just swinging wildly, right? Sometimes based on nothing more than a tweet or some random headline. Well, that exact feeling is why some of the smartest, biggest investors on the planet started looking for an alternative.
And that really gets to the core of it, doesn't it? On one hand, you've got the public markets, a total roller coaster, completely driven by short-term feelings. But private equity, it's the exact opposite. It's built from the ground up to just ignore all that daily chatter and focus on one thing, building real long-term value. So, how in the world do they do that?
Okay, it all starts with this first big idea, superior value creation. And I gotta say, I love this subtitle here, the personal trainers for companies. It's the perfect analogy. Think about it. A PE firm doesn't just throw money at a company and hope for the best. No, they get in there, they invest effort to make that company stronger, fitter, better, right from the inside out.
So the key takeaway here, the most crucial point, is this. It's all about being active. It's hands-on management. This is the total opposite of, just buying an S&P 500 index fund and crossing your fingers. Private equity is all about generating returns by actually fundamentally making the businesses they own better. And this process, it's a real journey, It kicks off with buying a company that's got potential, sure. But the real work, that starts the day after the deal is signed. It's about popping the hood, getting their hands dirty, and making real, tangible improvements to how the company runs. And there's only one goal: unlocking that company's true long-term potential. But what does operational improvement actually mean? I mean, it sounds like a buzzword, right? But it's not just theory. We're talking about real-world stuff. Things like totally revamping a supply chain to save a ton of money, bringing in brand new tech to juice up the sales team, or even bringing in a whole new management crew with a totally fresh perspective. It's real, strategic, hands-on work. And this is why it matters so much. Look, in a world where everything's kind of slow growth, you just can't count on the whole market to lift you up. That old saying, a rising tide lifts all boats, well, what if the tide isn't rising? The ability to create your own growth from the inside, that becomes a massive competitive advantage. All right, that brings us to the second big pillar here, and you'll see how these things connect. It's the information advantage. So if the first point was all about improving a company, this one's about knowing which companies to pick to begin with. It's about seeing what other people just can't.
Now, to really get this, we have to talk about a concept called information asymmetry. It sounds super academic, I know, but the idea is actually really simple. It just means one side in a deal knows more than the other. In the public stock market, all the important info is supposed to be out there for everyone. But in the private world, totally different ballgame. And this is exactly how PE firms get that edge. Because they operate away from the public spotlight, they can do this incredibly deep dive, what they call due diligence. They literally get to see everything: the nitty-gritty financials, the actual customer lists, where the competitors are weak, stuff a regular investor would never, ever get to see. So what's the end result of all that digging? It's huge. All that deep inside knowledge lets them spot opportunities that are basically hidden in plain sight. They can find those diamonds in the rough, the companies that are totally undervalued or just completely missed by everyone else. Okay, on to the third and final pillar of the bullish case. And this one is all about flexibility. It's about how private equity is built to not just weather the storms of a market downturn, but to actually use those storms as a huge opportunity, to thrive when everyone else is just trying to survive. The secret weapon here is something you hear about all the time in this world: dry powder. What is it? It's just a giant pile of cash. It's money that the PE firms have already raised from their investors, but they haven't put it to work yet. It's just sitting there, on the sidelines, waiting for the perfect moment to pounce. And when does that perfect moment usually show up? Well, it's when there's blood in the streets, when there's fear in the market. Just picture it: a massive sell-off. Panic is setting in, and everybody is sprinting for the exits. That's when this dynamic kicks in. As the value of all those public companies plummets, the buying power of that dry powder just explodes. It's the classic be greedy when others are fearful. They can swoop in and scoop up amazing companies for pennies on the dollar. And look, this isn't just some nice idea on paper. It's a proven strategy that works against the market cycle. History tells us loud and clear that some of the best performing private equity funds ever, the truly legendary vintage years, were the ones that started investing during or right after a big market crash. Why? Because they were buying low when everyone else was being forced to sell. All right, so let's put all the pieces together. The whole bullish case for private equity, it really boils down to those three huge advantages we just walked through. When you lay it all out, the difference is just stark, you know? Instead of just passively following the market, private equity gets in there and actively makes companies better. Instead of just reading the same public reports as everyone else, it uses its information advantage. And instead of getting crushed by market downturns, it uses them as a massive strategic opportunity. It's a totally different game. So I'll leave you with this one big question to chew on. In the world we live in today, where is real, lasting value actually created? Is it out there in the public spotlight getting tossed around by the whims of the market every single day? Or is it built quietly, patiently, and strategically behind closed doors? Definitely something to think about. Thanks for tuning in.